Kotak Wealth Optima plan. Will this ULIP add real value to your overall portfolio? What are all the risk and reward for an investor when he chooses to invest in this particular plan? Let us evaluate. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decisions. Before we start analyzing this particular Wealth Optima plan from Kotak Life, we will first understand the key features of this particular unit-linked insurance policy. When it is a unit-linked insurance policy, what it actually does is it collects premium from us. From the premium, they will deduct some charges. Over and above the charges, there will be one additional charge, which is mortality charges, life cover charges. They'll provide you life cover, death benefit to the nominee. Then the balance money will be invested in units. So this is a market linked, unit linked product. This product has got market risk. Money will be invested in stock market and money market based investments, right? This particular Kotak Wealth Optima plan gives you two investment options. They have yearly additions, wealth boosters, optional rider benefits is also available as key features. This particular Wealth Optima plan comes with two major investment strategies. One is a self-managed investment strategy. If you are an investor who knows how to manage your money in equity funds and fixed income fund options, then this particular strategy is for you. That is a self-management strategy. You yourself can decide between how much to invest between these funds, how much to invest in 100% equity funds, how much to invest in balanced funds, how much to invest in 100% money market fixed income security based funds, and when to move from one fund to another fund based on the market outlook, based on your risk appetite, based on you will withdraw these investments in short term or long term. Based on that, like you will manage this on your own. Second option is no, like I'm not interested to manage on my own. Then you have this age-based strategy. Based on your age, they themselves will give you some predefined allocation ratio. Based on your age as well as risk appetite, you can choose. So based on your age, if your age goes up, then your equity exposure will come down. That way, this age-based predetermined options are defined. You can choose this option also. Right? So as we have understood the basic details of this particular policy, we have to understand the key benefits now. Before going into the benefits, like let us understand an illustration here. At 4%, how much return it gives you. At 8%, how much return it gives you. This particular illustration we have downloaded from Kotak Life website. So they assume the returns based on, in a worst case scenario, they will be able to generate 4% gross return. That means pre-expenses return. At 8%, they will be able to generate, sorry, in a best case scenario, they will be able to generate 8% gross return. That is what they have told. So if someone is contributing for 7 years, annual premium of 10 lakhs, sum assured of 1 crore, right? Then what is the kind of return it gives you is what we have given, right? What kind of maturity value it can fetch you. It can fetch you in a worst case scenario, if it is for a 10-year period, it can fetch you 82 lakhs. You are paying premium of 70,000 rupees. That is 10 lakhs every year for 7 years, and you are waiting for 3 years. On maturity, you get 82 lakhs. In a best case scenario, in the same case, you will get 1 crore, 8 lakhs, right? So similarly, like for 15 years, 20 years, it gives you a different benefit, but the overall gross return and the internal rate of return works out to be the same. What is the internal rate of return? That is the net return. 4% and 8% are gross return. What is the net return for investors? That we will calculate when we are discussing in detail the benefits. This policy comes with three benefits. One is maturity benefit, death benefit, and tax benefit. Tax benefit is very simple. You will be like having section 80C benefit for whatever the investments you are doing. Death benefit. What is the death benefit? Death benefit is highest of the three values. Basic sum assured, fund value as on date of the death claim. Third is 105% of the total premiums paid. Out of these three values, whichever is higher, that will be given to the nominee as the death claim. So we have looked at the death benefit. Now is the time to look at charges. We have to look at the maturity benefit, but before maturity benefit, we have to look at the charges. Why? Because I told you what is the kind of gross return it gives you. We have to look at the net return. The difference between the net return and the gross return actually goes to charges. So having a little analysis on the charges will give you better insight and better understanding. This policy has got premium allocation charges. Premium allocation charges ranges between 0.5% to 3.5%. This is basically an entry load kind of charges. Whenever you enter into this fund, whenever you pay money in this fund, you will be charged this charges. Remember, this charges is peculiar to ULIPs, and this is not there for mutual funds. In mutual funds, Securities Exchange Board of India regulator has abolished entry load, because Securities Exchange Board of India has got very stringent, like investor friendly regulations. IRDA has not yet abolished this entry load. That is why, like, all insurance companies are freely charging premium allocation charges. Policy administration charge is another entry charges. It will be charged to you. Then fund management charges. This is a common charge. This is a justifiable charge. They charge up to 1.35%. But only thing is, discontinued policy fund, like, they charge 50%, which is huge. Switching charges. Whenever you switch between different fund options, they charge. Again, this is an unnecessary charge they are charging. This is not a justifiable charge. These kind of switching charges are not there in mutual funds. Partial withdrawal charges. When you withdraw partially, you have to pay withdrawal charges. Discontinuance charges. When you stop paying premium, there are discontinuance charges. The discontinuance charges ranges between 2% to 6%. Again, this is not available in mutual funds. Mortality charges. This is a justifiable charges, because they are giving you life cover. They have to charge you. They are charging. Depends upon your age, it will be charged. There are some miscellaneous charges. So in the total 8 categories of charges, only 2 charges, mortality charges and fund management charges, are just justifiable charges. Rest of the charges are definitely not justifiable, in my humble opinion. Then what is the internal rate of return this policy gives to investors? When we have assumed, we have taken an illustration. I have given you the illustration already, right? For the same illustration, if you work out the internal rate of return, in the worst case scenario, it works out to 2.87% as the internal rate of return. In a best case scenario, it works out to 6.85% as the internal rate of return. So even after taking market risk, investing in stock market gives you 6.85% net return to an investor. Will this return help you beat inflation? Definitely a question mark. Is this a decent risk premium return? Again, question mark. So because of these reasons, like, you have to reconsider your proposal to buying this particular policy. All right. Because the net return works out to 2.87% and 6.85%. However, risk-free investment options like PPF and RBI bonds give you like a higher return. All right. They give you like 7.1%, 7.15% RBI bonds. So in what way, like, Kotak Wealth Optima plan is beneficial to investors? Because even after taking risk, the net risk premium return works out only to 6.85% return according to their benefit illustration. So do we have to consider this policy? Okay, before you decide, I'll give you one more option for you, because this Kotak Wealth Optima plan is a long-term plan, because you have to lock your money for 10 plus years. Then the money is invested in riskier assets like stock market based. So to make an apple to apple comparison, I'm taking another market linked investment, which is mutual fund ELSS. Fine. In mutual fund ELSS, what kind of return it gives you? I'm taking an example of a combination of term insurance plus ELSS. Whatever the investments you are doing, same 10 lakhs in Kotak Wealth Optima plan, 10 lakhs premium, 10 lakhs premium you are paying, that is like giving you two benefits. One is 1 crore life cover plus a maturity benefit, right? Same way, out of this 10 lakhs premium, I'm taking a portion of the money and taking 1 crore term insurance policy. Balance money is actually getting invested in mutual fund ELSS. That way, I am dividing and ruling this particular investment. When I do that, what kind of maturity benefit it gives you, if you look at it, then like which is huge, right? It works out to 11.18% return, whereas it gives you 6.85% return only there. There the return was, even in a best case scenario, return was working out to like 2.17 crores. Here the return works out to 4.33 crores. 4.33 crores, right? So that way, mutual fund ELSS seems to be giving you a good long-term return, inflation beating return, and a risk premium return. For the risk they take, they reward you adequately. But Kotak Wealth Optima plan, for the risk they take, they are not rewarding you adequately. So why they are not able to reward you adequately? The logic is very simple, right? Because they have got huge charges, 8 categories of charges, 8 variety of charges, right? Out of that, only 2 is justifiable. Rest of them are not justifiable charges. Because of that, their net return sizably comes down. So if your purpose is to invest or to get life cover, both of them is not get properly serviced by Kotak Wealth Optima ULIP plan. So I would strongly suggest a no to this particular policy. Investors can avoid this policy. If you are a risk-free investor, means you are an investor who don't want to take any risk, then in that case, I would strongly suggest you to take term insurance plus PPF investment, because this itself will outbeat the net return from Kotak Wealth Optima plan. Or if you are a long-term investor who knows stock market ups and downs, you got conviction on long-term stock market performance, then in that case, I would kindly suggest you to go for the combination of term insurance plus ELSS mutual funds, or term insurance plan plus any other diversified equity mutual fund investments. That will definitely outbeat Kotak Wealth Optima plan. So if you have any further questions or doubts, you want to know more about the analysis, logic behind the calculations and all the detailed research about this particular policy, it is completely available in our website, because we have done a detailed in-depth research on this policy. That detailed in-depth research is available in our website as a blog post. I have given the link to the blog post below this video. You can click the link and read the article now. If you have any subsequent questions even after going through the blog post, then I would suggest you to register for our initial complimentary consultation with our certified financial planners. You can discuss with our certified financial planners regarding this policy or any other investment options or achieving your financial goals, right? To book your free appointment with our certified financial planners, you can click another link given in the description box. Also, we organize regular insightful investment webinars where we discuss about like wealth creation techniques, wealth creation strategies, successful strategies, what kind of investment scams are there in the investment market, and how you can like stop yourself from falling prey for those kind of scams or traps, right? So all those things we will discuss in the webinars regularly. If you want to participate in our webinars, again, there's one more link in the description box. You can click the link and just leave your name and email ID there. Then we will send you the invite link to join the next webinar. Hope you like this video. I'll again come back with another useful video. Until then, bye.